Take two, and you can see why it didn't work because I got my ugly head up there on the opening slide, which is a bit indulgent. So I ask your indulgence because that was only last Tuesday in Johannesburg, and after 10 years, you know, we're all an overnight success. That's our first gold pour. So that's why I wanted to put it on the front page. It's significant because, you know, believe it or not, this is the first new underground gold mine in South Africa for 15 years. And for 100 years, South Africa was the biggest producing gold country by a mile. So it's quite a significant event for us and for the local community and the government. And as you know, when you're successful, success has 1,000 fathers. So I think the thing we should establish at the beginning is, you know, why would you invest in this company? We all should be accountable to the investors as to why we think you should invest in our company. But in this current turbulent situation with the Gulf War and so forth, I thought it was helpful to look back at what the great sage of Omaha, Warren Buffett, said. Only when the tide goes out do you discover who's been swimming naked. So now you've got to work out who's swimming naked and who's not. Hopefully I can show you we're not. Because the tide's definitely gone out in the last couple of weeks. So the key point here for me is that we've gone where the gold is, and I'll touch on that later, but we're in an area that's well renowned for gold and it's produced a lot of gold over the journey. The other thing I think in terms of the journey of a company going from exploration to development to production is every stage of that process is a stage in de-risking the process, and you investors are about getting reward. You don't want risk, you want to minimise risk. Well, the biggest risk I think to a production company going into development is, are we funded? And I can tell you this project is fully funded. Luckily, probably more by accident than planning, I did the last capital raise in January while everyone was away, and we have all the equity components of the project plus our bank funding in place. So that's a big risk that's actually gone out of this as we now move to into the transition to being a producer. In terms of who we are, sometimes I forget to say, we're in the Witwatersrand Basin. We own 74% of the project company because in South Africa we have a black economic empowerment partner. We have a big resource, 7.24 million ounces at 4 grams a tonne in JORC. Most of that's actually measured and indicated. We're an underground mine and we've completed a DFS for the first stage of the mine. So we've done a full feasibility study which is updated only last July. We're toll treating with Sibanye-Stillwater, so we're not building a plant. That de-risks the project further, I think, because we don't have all the risk of constructing a plant and commissioning a plant. And as I said, we made our first gold pour only last week. The company structure, like a lot of juniors moving into production after a long time getting there, we've got a lot of shares on issue, 4.3 billion, but we're moving to do a consolidation of the share capital 10-for-1 in a few weeks. In April, we're having a meeting on that. We have a strong cash position, 42 million in the bank due to a capital raise we recently done. And we had been moving up strongly on the market value capitalisation curve, but we're back about 275, 280 million today. This slide's only a week old and it's a bit out of date because of what's happened in the last week, but I'm sure we'll get back there. The main thing is in the last raise we brought on about 9 or 10 Australian institutions, which is the first time we've had really solid institutional support. So I think that all goes well for the future of the company, having that support going forward. Who's going to execute the plan? Now we've done a lot of the hard work, we need to execute the plan. I think I have a really good team in place. The two I want to particularly highlight are Rudi Dacel, who you saw his ugly mug on the front page as well. He's my CEO and Managing Director. He's building the mine. He's had 25 years experience building and developing mines as a mining engineer in Africa. A lot of that's been in narrow stope type mining, which is like on the platinum mines and other mines in the area. So I think he's been with me now for 5 years. He started as our Chief Operating Officer and I've got a lot of faith in Rudi. Having been around mining myself for 35 years, I have a lot of faith in this guy. The person on the bottom side there, Tazama Sawizi, I also want to mention because she's on the board of the local company with me and with Rudi. Tazama has an excellent background in government and community liaison, which is very important in this part of the world. We have a lot of communities around us. We must align our interests with them, and she's done an excellent job on that. And you know, she's been recognised more recently with the Rising Star Award for AMEG last year at Africa Down Under, and she's been recognised in many other awards. So I think we have the right team, which at this execution phase is very important. So where are we? I mentioned the Witwatersrand Basin. We're sitting about 20 kilometres to the west of Johannesburg CBD. It's known as the City of Gold because it was built on gold from 1886, when actually gold was discovered there, if you didn't know this, by an Australian. So we're back there now. But I want to quote from the literature here because I think it's good to get a sense of the size and the productive capacity of the Wits. And this comes from the literature. So I'll quote, "The Wits Basin is by a landslide the largest single gold producing district in world history." In world history. It's produced 22 to 25% of known gold to date. So if we have to go back 6,000 to 8,000 years when people started scratching around for gold, this place has produced almost a quarter of all that gold. So every fourth gold ring, every fourth bit of gold you see, every unit of gold you see has come from, theoretically, has come from this field. To put it in perspective, which I think is helpful from the Australian perspective, because we're now one of the world's biggest gold producers, but if we just look at the local position here, Queensland as a state, in 130 years, has produced 47 million ounces of gold. The most productive gold field in Australia, the Super Pit, what was the Golden Mile, now the Super Pit in Kalgoorlie, has produced 65 million ounces of gold over 130 years. So the total there is about 112 million ounces of gold being produced by the entire state of Queensland and by the Super Pit. The Wits Basin we're talking about here, where we are, this one gold field in South Africa, not the whole of South Africa, it's produced over 1.5 billion ounces of gold. So we're talking over 13 times what to give you some perspective on how big we're talking about this. So I think that's very important to keep in mind as well. We are going where the gold is. In terms of the funding I mentioned, we are fully funded. We have, as I said, a large cash balance. We were strongly supported by one of Australia's biggest funds, Tribeca. It took 10 million in our 33.7 million raise. We also have a bridging loan agreement with Nabare out of New York, which will be paid back soon as we take up our bank funding, which is a $50 million two-bank facility out of South Africa. Nabare are also offering or proposing to us that we actually replace the banks and they take the whole load, but we'll probably go with the banks, but we're waiting to hear back from them. I think the other aspect of having bank finance for a junior, which I want to sort of cover, is that, we've gone through a 6-month intensive, robust due diligence process with these banks. So they have tipped us upside down with their lawyers, their geologists, their consultants, their engineers to make sure their lawyers to make sure what we're doing is viable and we have the capacity to execute. So that's not a validation or an underwriting of your position, but when you're investing in this company, if you choose to invest in this company, we have gone through that test from external verification, so to speak. The mine is now producing, as I said, and we've poured our first gold. We're not reinventing the wheel here. We are using certain modern methods with trackless vehicles and modern technology on the development drives, but we're using, in terms of the stoping, we're using tried and true breast mining techniques that have been used in South Africa for 100 years with success. As I said, there's some tweaks. We're using hydropower as a new technology rather than air compression, which is far more efficient. The support locally for the project is immense. We're creating 1,000 jobs in an area that needs jobs. When we opened the mine in December, we had a formal opening and we expected to get a miner turnout. We had the Minister came, who's also the head of the ANC, and actually opened the mine. The Australian High Commissioner came and made a speech. The CEO of the Minerals Council of South Africa came and made a speech, and we had all the major press there. We even got press coverage from the Wall Street Journal. I couldn't believe it, in the mainstream journal. So it's a big thing in that jurisdiction to see potentially this as a catalyst for gold mining restarting on the Wits Basin, because a lot of the big companies left there 20 years ago, but they left a lot of gold behind, as you'll see from our resource statement. Project economics. This is under a definitive feasibility or banking feasibility study that was, as I said, updated last July. The numbers really are compelling. And bear in mind, this is only stage one. We've only put one stage of the project into DFS. The results of this study are all based, the numbers I'm quoting to you are all based on a $2,850 gold price, which even with the recent correction shows that we've got a lot of buffer between that and where we are now at about 4,500. At that number, though, it generates $1 billion of free cash flow. It has an NPV post-tax of just on $500 million US, and it has an internal rate of return of 81%. So you can see, and even when we go down the sensitivity tables, even at an 1,850 gold price, which our sensitivities go down there and below, we are still getting a robust project with a 35% internal rate of return. So very strong economics at the current prices. If we put in the sensitivity tables the current gold price, we're up at $1 billion NPV. That's our ore reserve. The banks require us to have a solid ore reserve to take them through 7 years or 40% of production. So you can see we have 384 ounces in reserve. We also have, we use in this project as phase one a little bit over 1 million ounces of gold, and that's compared to, as I said earlier, a 7.2 million ounce resource. So there's a lot more to do on this project. That's giving you a schematic of the structure of the reefs. They're running at 45-degree angles. Most of the gold was taken out of the main reef package on the right-hand side of that slide. There's gold, though, left in the Bird Reef, and the Kimberley Reef in our area has been basically untouched. So the backbone of our property is the Kimberley Reefs. It's hard to believe that they left them behind. They were running at 3 to 4 grams a tonne, and we call it Qala Shallows because we're mining at level 2. We're mining at 35 metres depth at the moment. We're not mining deep like most South African mines. As I said, 55% of the resources are in measured and indicated. So we've got a pretty strong profile there. There's been steady growth on the mineral resource, which was not unexpected given the history of the place. Originally, you can see on the left there was an historic resource. A company that held the lease in about 2000 was reporting under JORC, under the Australian standards, because it was listed here, and they had a 12.8 million ounce resource. So there's a massive resource still there. What we've done has been conservative because some of the basin is flooded. We've constrained most of our resource to 400 metre depth, but obviously if we pump and plug and put those studies together later, we can uncover the rest of that gold that's there. So we're not going to run out of gold on this project, I can assure you of that. That's giving us an overview of the actual lease area. That lease area with the prospecting rights that we've added in is the historic. It was known historically as the DRD lease and the Rand lease. It's about 5,000 hectares, and just to put it in perspective, that 5,000 hectares produced about 31 million ounces of gold up until 2000. So we're advancing now. We're underway. We started mining in October. We've been stockpiling until a few weeks ago. Then we've done our first pour. We're marching towards a steady state under this phase one of 70,000 ounces per annum. And we're focused on making sure we execute efficiently and professionally and in accordance with budget. The new areas that we've opened up, however, will now enable us to move to a bigger idea of what we do. We've just commissioned a scoping study we call Project 200 to try and better utilise the asset base we have. And that should be coming out around mid-year. We'll have news on the scoping study and how we can grow this resource or grow this production rate to a much higher rate. I don't want to sound like a steak knife, but we also have a uranium project, which a lot of people understand that the Wits was also a big producer of uranium. The Bird Reef package carries a lot of uranium, so we do have a project we're going to drill out there. It has 2 reef horizons. One's got gold in it at about 2 grams a tonne, and the other one's got uranium. And so what we're going to do is drill that out, put it into a resource, and then look at a scoping study or taking it through the feasibility process, because this is all separate to Qala Shallows and all separate to Project 200. This would be effectively a totally separate mine on our mining right area as a standalone operation. Project 200, as I mentioned, we've built the foundations with the resource base and the work we've done, but we're executing on Qala. We're planning bigger things, and with the strong institutional support we received lately, I think we're well on our way. There's some, oh, what have I gone the wrong way, have I? Sorry. I've been going the wrong way. So there's some pictures of the mine in operation. As I said, we're not reinventing things, but it is moving forward, and it's ramping up on track. I was there last week. We have a strong ESG responsibility as part of being a South African operator. We have strong social labour plans and ongoing engagement with our local community. It's very important. They're very supportive, but we've supplied the jobs, so it's a mutually beneficial arrangement, and we're working very hard to keep those relationships strong. And I just wanted to give you an overview of the mine to finish. You can see it's well up and running. It's close to the city of Johannesburg. We have all the amenities available, all our equipment supplied locally. Unlike the Australians, the South Africans still can make things. So they're making all the equipment for us within half an hour of the mine. And we have 85% availability contracts and servicing within half an hour phone call away. So thank you very much for your time. I'm sorry about the hiccup before. That's West Wits.